Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is the first day of a brand new week, June 5th, Monday. We are going to take a look at 3M. It's a little late in the day, so let's just jump right in the video. All right, if you want to know more about them, check them out, www.3m.com. That is their homepage where I pulled this information from. From humble beginnings to Fortune 500, when 3M began in 1902, yep, that's right, it's been around for over 100 years. Our 5 founders had a single goal to mine for corundum, a mineral ideal for making sandpaper and grinding wheels. Turns out what they thought was corundum was really another low-grade mineral called anorthosite. Discovering the poor quality mineral could have caused an early end to our fledgling company, but our founders persisted. Why? Because something more important was born that first year, the spirit of innovation and collaboration that forms the foundation of 3M today. So instead of calling it quits, we turned to different materials, applied them to other products, gained the trust of important investors, and built up sales little by little. And they have a lot of products. Right, they have over more than 60,000 3M products, and are used in home, businesses, schools, hospitals, and other industries. So they touch a lot of industries out there, and corporate operations in 70 countries and sales in 200. So again, worldwide footprint here. Sell a lot of products, probably some in your home. I'm positive there are some in your home. They have products in abrasives, adhesives, sealants, and fillers, advanced materials, automated parts and hardware, film and sheeting, filtration and separation, home goods, insulation, tools and equipment, building materials, cleaning supplies, coatings, communications, lab supplies and testings, labels, lubricants, medical supplies, compounds and polishes, dental and orthodontics, electrical, electronics, materials and compounds, office supplies, personal protective equipment, signage and markings, tapes. I mean, they touch a bunch of industries, right? So again, you probably have some of this stuff, whether it's some of the stuff like my kids have the post-it notes they like, and the highlighters. I mean, they just tapes. I know there's some stuff out in my garage that I have as well. So I'm sure that you have some of their products in your house. Now over to the important stuff. They were down 4.44% on the day. We are talking about 3M Company, ticker MMM. Closed out the day at $97.98. You can clearly see that drop throughout the day. Excuse me. 52-week range as low as $92.38, as high as $152.30. So they are up against their 52-week low. They could drop a little bit more. They may drop a little bit more, but closer to their 52-week low than their 52-week high. And overall, over the last year or so, they have been dropping. I owned this company. I was buying them back in the 120, 130s, and they had some issues come out with the lawsuits that they're facing. That's another one you want to pay attention. They are facing some litigation right now. I think they just released Friday that they settled one case that they had in litigation, but they have another one as well. So that is something you want to pay attention to. They will have a big payout at some point. I think they are putting money back for that. Average volume 3.5 million. Today's was 5.9. Again, you can see that sell-off. Market cap 54.053 billion. Today, the beta or overall beta 0.95. So they are just a little less volatile than the overall market. Price to earnings PE ratio is $9.30 per share. Earnings per share EPS sitting at $10.53 per share. Earnings date, the next one coming up, July 24th through the July 28th. Look for it sometime in between those dates. For dividend, $6 paid out in the year. They are quarterly payer. We'll see that here in a little bit. Very high yield on this one, 6.36%. And that is because they've really pulled back overall, right? Ex-dividend date, next one, May 18th. We just passed it. We're in June, so we are past their last ex-dividend date. Their payout will be on the 12th. So if you were to buy them now, you would be in line not for the June 12th payment, but for the one after that. And according to Yahoo Finance, they have a one-year target estimate of $115.35. So it does speak to some potential upside appreciation, at least according to Yahoo Finance. I am not affiliated with Yahoo Finance, just one of the sites I like to go to. So I always recommend going in, doing a little bit more on more than just the surface level analysis, right? So I like to go into statistics. One of the things I look for in my criteria is dividend yield theory. You want to be fairly or undervalued according to dividend yield theory, in my opinion. So I look at their 5-year dividend average, right? You'd find that under statistics, go down under dividend splits. 5-year dividend average is 3.67. You compare that to the forward or current dividend average, right? 6.36 forward, same thing. And if it's higher, which it is, significantly higher actually, it speaks to some potential undervaluation. So this one is potentially undervalued according to dividend yield theory. Payout ratio is in a decent place, 61.67%. I like 75% or less. We talked about their payout here already. And another one you want to look at is free cash flow. They pay their dividends out of free cash flow, so you want growing free cash flow over time. So 2019, 5.3 billion. 2020 was 6.6, so growing there. 2020 to 2021, a downturn, right? We start to see them trend downward, 6.6 to 5.8 billion, and they continue to trend downward. 21 to 22, 3.8 billion, and we haven't seen what they're going to report out in 2023 yet, but that is something to watch. Downtrending free cash flow, not a good sign, especially with how high their payout ratio is, and at 62% or 61%. And some change there. They are on the higher end of the spectrum. Again, I like 75% or less, so they do have some room to grow, but a little concerning that free cash flow is declining. Now, I always recommend more than one source, so another one that I like is stockanalysis.com. And according to the 18 stock analysts, they've had to take a look at this. They call it a consensus hold. I would actually agree with this. I would love this company back in the 80s. The low to mid 80s is where I'm looking for this to drop. That would mean a new 52-week low, but that's just what I'm looking for. You make up your own mind of what you're looking to jump in this one at if you are interested in it, but I would not be interested unless it dropped back into the 80s. Excuse me. And they call it a consensus hold. Now, they have a low estimate of $95. It's currently sitting just above that. So if it dropped to their low, it would be a 3.04% decline in stock prices. They have an average estimate, $122.83. That would be a 25.36% increase in the stock price. And they have a high estimate of $189, which would be a 92.90% increase in the stock price. Would that be a huge jump up? You never know, though. Now, same thing. I like another one that I like is return on equity and return on invested capital. You would find this under statistics if you went to stockanalysis.com. Again, not affiliated, just one of the sites I like to go to. They give you some of the same information that Yahoo Finance does. Financial statistics, forecasts. That's what we're looking at here under statistics. One of the things you will see is return on equity, that's ROE, and return on invested capital. I like 10% or greater on both of these, or in line with their industrial average. I will just say this one smashes both. 37.7% on return on equity and 20% return on invested capital. Much higher than the 10% I'm looking for, and I believe this does beat their industrial competition as well out there. So very nice return on their invested capital. Really, the only thing I'm seeing at this point is the downtrend in free cash flow there. Now we're going to jump over and look at dividends. And again, 61.86% payout ratio. So they do have potentially room for growth. Another one that I don't like here, dividend growth, 0.67. They are not growing their dividend very fast. And it's probably because they are potentially looking at some litigation. So I would say litigation risks, free cash flow is not growing, slow dividend growth. Those three things lead me to a lower valuation. Again, I would not personally be interested in this one unless it hit in the 80s, and then I might look to add it into my portfolio. That would be a really high yield at that point. You're probably over 7% at that point, which would be enough to entice me, even with slow dividend growth, to say, hey, I'll take the 7% dividend growth knowing that I'm not going to grow very fast, right? But right now, with the litigation and the free cash flow not growing, it's one that I am avoiding. It is on my watch list again, but it has to be back in the 70s. You can see going back to 2021, $1.48. They raised it up to $1.49 in 2022. Just raised it up again to $1.50 back in February. That's where it sits currently. So you are getting some growth. It's just not growing very fast. This is my investing criteria, right? I like to understand the business. I want growing free cash flow over the last 5 years. Remember, I said I didn't like that. It wasn't growing, so that's one of the metrics that I look at. Growing dividend, it is growing, but very slowly. I really like it growing more than 0.67%. Dividend payout ratio of 75% or less. That doesn't apply to REITs or BDCs or companies like that pay out a higher rate of return. A check valuation based on dividend yield theory. You saw that. We did that on the first one. It is below undervalued currently according to dividend yield theory. Buy below current cost basis or within 15% of its 52-week low. You can do the math on that. It's probably pretty close to within 15% of its 52-week low if it's not already. Return on invested capital equal to and return on equity equal to or greater to the industrial average or 10% plus. And for financial companies, you can really use price to book for any of them, but I throw price to book in specifically for financial companies, and I want near one or lower. And it must meet 4 of the 7 if it's not a financial company and 5 of the 8 if it is. You should set your own investment criteria, but that gives you an idea of what mine is, right? Well, these are quick hitters trying to find value in the market. That is 3M. Let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, and most importantly, subscribe to the channel. Join me on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we're watching, stocks we're looking to buy, stocks we're avoiding altogether, our experiences overall. I just got into options recently, so if you use options, go ahead and drop a comment down below and let me know what companies you use options on. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a stock you would like me to do a stock pick of the day series, let me know down in the comment section and I will work it into the rotation. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't money. You should never invest any amount not comfortable losing. Always do your own research, investigation of your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.